Bitcoin has fallen by 7.82% since Tuesday, the 29th of October. In today's video, we're going to take a look at the technical analysis on BTC, where I'll be sharing my thoughts and opinions as to where I think that price action is heading next. As I get into today's video, if you do find it useful and informative, smash that like button. If you are new to the channel, subscribe. Let's go ahead and take a look at what's going on with Bitcoin. So here we have Bitcoin paired up with USDT. We're on the 1 hour Binance chart here, and you can see a pretty big move to the downside. After testing and trying to push up into new all-time highs, the bulls were obviously rallying up, getting into their long positions, thinking now was the time to go up into new all-time highs. And unfortunately, that wasn't really the case. We saw a lot of positions getting wiped out, getting absolutely wrecked, because the market's just not really ready for those big bullish breakouts to the upside. But we are getting close. We're getting closer to it. It's just too soon right now. Now, obviously, this video going out on a Sunday, weekly close is a very important thing. We also do have some US election stuff happening just a few days away. So there's some positivity here, and we could be just looking at profits being taken to basically reaccumulate at a slightly lower price ahead of the US election. Now, in the last Bitcoin video that I put out on Friday, we were looking for a long position. This one rallied up significantly further than we thought. Okay, so we were looking for an entry around the 68,826, and we're just looking for a 1.65 risk reward ratio here, take profit 70,030. We can see that we've actually pushed up quite significantly. Let me remove that. We can see that we pushed up into this previous area of resistance come support. Okay, this range was 71,190 to 71,587. So hopefully people were paying attention, because what we saw here was basically a bit of a reversal in the market, a very deep one at that, and could have been a fantastic opportunity to kind of jump into BTC's price action. Now, the concerns that I have are all around the idea that this entire structure is what we would call a leading diagonal based pattern. Let me show you what the concerns are, okay, and then I'll talk about what I think that our next moves should be in the market. So here we can see an initial kind of overlapping structured move to the downside, coming down quite deep, tapping lower than 1.618 at 69,492. This basically converts this into a 5-wave pattern. Now, a lot of people understand Elliott wave in 5-wave structures, because when you see a 5-wave pattern, a lot of people will kind of draw it in like this, right? And they say, it's a impulsive 5-wave move. And if wave 4 comes down and crosses wave 1, it's not impulsive, it's done. It's not that structure, right? But what a lot of people don't understand is there's actually lots of different variations of a 5-wave movement. And one of the ones that we see in here right now is the wave 1 diagonal, wave 2 retracement, a wave 3, which is impulsive in the way that it went, a wave 4 that does in fact intersect with wave 1, and then a move to the downside. Now, there's a couple of different things going on with this idea. The first idea here is that this is a diagonal. The concern that I would have is that we do not see the internal structures, the correct internal structures, to complete that wave 5. Okay, now that wave 5 actually would be a very interesting one. Moving down here, it's only just gone into its range of expectations, which would be the 67,152 to 68,184, which obviously we tapped into earlier today. Okay, but the internal workings on that 5-wave move are not really giving us the idea that this is a complete structure. So you can see we have kind of more of a 3-wave pattern going on. There's actually 3 here, 3 up, 3 more down. We'll look for another one up and another one down, I think. And so what I mean by that is the same kind of diagonal pattern that we saw up this end, just on a bigger scale down this way. Now, when we have diagonals, obviously I said a leading diagonal is one potential possibility. The other one is what would be called an expanding diagonal. And in the expanding diagonal is one that I think is probably the one that's going to fit best in this scenario. And you can see here that it expands down over time, and it gets this kind of really big wave 5. Now, with a 5-wave pattern like this, okay, a super bearish one in this case, but it can be a bullish variation of it, but there is a bearish one right in front of us. This particular pattern would have a couple of set rules, right? So wave 1 must be the shortest wave, wave 3 is not allowed to be the shortest wave, and wave 5 must be the longest wave. Okay, so by wave 1 being the shortest and wave 5 being the longest, wave 3 is obviously not the shortest, so kind of by default, so it's kind of a moot point. But anyway, wave 4 does in fact intersect with wave 1 here, okay, but is not allowed to retrace the height of our wave 2. So everything is stacking up in this idea that we have this kind of maybe expanding diagonal based pattern. And in the fifth wave movement, we have a diagonal pattern in itself as well. Okay, so we can see 3 waves coming down, a move up, 3 waves moving down, and another one coming up. Now, this could be the reverse of the expanding diagonal. This here is starting to shape up more like a contracting diagonal. Okay, and a contracting diagonal is the same as this, but it actually contracts down and inwards over time. And you can start to see that this is forming a move like this. Now, this might be known, and if I remove the white lines just for a moment here, in fact, I'm going to remove a lot of this noise off the charts just so that we can see this a little bit clearer, and I will also remove the EMAs for a moment. Okay, so here you can see what would be known or commonly known as a falling wedge pattern. Now, the falling wedge pattern, of course, is a bullish one because it is actually looking for a bullish break to the upside in this particular case. Okay, so basically what you can see is that the selling activity weakens over time, and then we are looking for a break to the upside. Now, that's good news, okay, for the bulls, of course, and maybe not so good for people shorting the market right now. So there's a little bit of positivity, but obviously we have to couple that with the bigger picture here, which is that if I am right about all of this, and we do in fact move down more aggressively towards 67,150, then we have to acknowledge that this is more than likely going to actually be a part of an expanding diagonal where we see this final finishing move down here, which means a retracement to the upside is just a relief rally. So that falling wedge pattern, we look for the relief rally. We obviously know that there's this previous area of resistance up here as well, just above $71,000, that there could be a very interesting spot for us to unfortunately start to see further declines in the market. So we might see, and kind of thinking about everything fundamentally that's going on in the real world, we might see some positive price action on the back of the US election, taking us out towards 71,000, only to actually have that kind of, I guess, euphoria kind of wear off and maybe pull back down. Now, that's the worry, okay? That's the big worry that we have. But obviously things can change, sentiments can shift, and maybe, you know, fundamentally things can change. But for now, we are on the cusp of a potential long position, okay, which is what I want to talk about. So let's go ahead and take a look at the momentum indicators as well. Here we can see stochastic RSI is currently moving up, but that's not really a major thing to kind of contend with on the 1 hour time frame. Turn this off and bring in the divergence indicator. You can see that we are rallying back from the oversold area, but it's not really holding up. And we can also see the MACD histograms here seeing a little bit more selling increase. But, and this is the kicker, we can see bullish divergence right inside this falling wedge pattern. Okay, so we can see this falling wedge, see the fifth wave movement, and at the same time as seeing that, what do we see down here? Well, we can see that there is weakness in the selling pressure, right? So this MACD histogram shows us that there isn't as much selling pressure as there was previously, specifically with the lows of our wave 3 over here. That tells us that although we've gone into lower lows on the price action, we have gone into higher lows on the histogram. That is a bullish divergence, and therefore supports our thesis that we're going to see a bit of a push to the upside, not necessarily to the downside. Now, obviously, we can't time the market. I'm still looking for a little bit deeper in the price here before we get into the kind of the bigger runs. No guarantees, of course, because minimum expectations have now been met. Okay, so our minimum expectation was 68,173. That's been met. So we want to be thinking about those long positions, and we want to target out the previous area of resistance, in my opinion, which would put us at 71,190 to 71,600 approximately. Okay, so our idea here is going to be that we finish off this structure and we actually look for long positions. Now, we could, of course, I mean, I'm looking at this and I'm thinking to myself, we should really come down one more time. So I'm going to be really cautious and, I'll be cautious on it. I will go ahead and do something like this. I would put stop loss at around 65,500 if we can. Okay, and we want to target out this slightly higher range up here, which I'm not going to be able to do in one foul swoop, so we'll go ahead and adjust our stop loss in a second. So stop loss will have to come up just a little bit. We need a 1.5 minimum risk reward ratio, so stop loss at 66,138, entry coming in here at 68,160, and take profit at the top there, 71,196. That would be my approach to this, because I do see this as a bullish divergence, finishing fifth wave structure of our expanding diagonal, and then we'll look for this run to the upside. Of course, a 5-wave move like this isn't on its own, so this can only really be in a couple of positions. And taking a look at our structures here, it doesn't look like there's any real major grounds for concern. Actually, there probably is major concern for grounds for concern, to be fair. So we will have to see how price action goes, whether or not we can break that high. I don't think we will, based on the sentiment of what's gone into this so far. The falling wedge is bullish. The 5th wave move on the low side is bullish now, showing us momentum shifting to the upside. So I do think a long position here is the one to go for when it comes to trading the smaller timeframes for BTC. And talking about trading, we have an amazing deal for you today. How does a 10% cashback bonus up to 2,000 USDT sound? That's right, 𝗗𝗀𝗀 is offering an incredible promotion, but it's only available to the first 100 users, so you'll need to act fast. 𝗗𝗀𝗀, a top cryptocurrency exchange, is giving new users a fantastic opportunity. When you sign up using the special link in the description, you can get a 10% cashback bonus up to 2,000 USDT in your futures account. And the best part, it's first come, first served basis. So the first 100 users to sign up will be the ones who can claim this bonus. Here's how you can jump in. Step 1, click the special link in the description to sign up to 𝗗𝗀𝗀. Step 2, once you're in, start trading the futures. Step 3, you'll automatically get a 10% cashback bonus in your futures account, up to 2,000 USDT if you're one of the first 100 users to sign up. So what are you waiting for? This is a limited time offer, and only the first 100 users will get this incredible deal. Click the link in the description down below, sign up to 𝗗𝗀𝗀 and secure your 10% cashback up to 2,000 USDT before it's gone. Don't miss out on this amazing offer from 𝗗𝗀𝗀. Remember, it's first come, first serve. So hit that link in the description and get started now. Good luck and happy trading. Okay, let's go ahead and roll this up into a daily time frame. Now on the daily time frame, you can see that we are in a more bearish position. Okay, so here on the daily time frame, and one of the things that I was really kind of cautious with and kind of really kind of sounding the alarms around that $73,000 level was that we have a rising wedge pattern. Okay, so just like we were seeing on the smaller time frame, this one's actually bearish because it's rising to the upside rather than falling to the downside. Now we've had a bit of a cooling off, we've created more overlap, and the good news is that I don't think we're necessarily done with seeing a little bit of green on the daily time frame, but things can change and shift very quickly. Okay, so if I bring in our EMAs again here, you can see that we are still relatively bullish, right? We're above the 200 EMA, above the 50 EMA, the 50 SMA, all those things are looking pretty good, right? Bring in our histograms here, and you can still see that we are on the cusp of something major. Okay, so we can see that our histogram buying pressure is decreasing. Okay, so momentum is decreasing as price is pushing up into higher highs. This, of course, is a bearish divergence. Not only do we have the rising wedge pattern that you see here on the chart with the trend lines, but you can also see that there's diminishing momentum behind that action. So it's not a sustainable move to the upside. This is why we were talking about going short all around that kind of area of that $73,000 and why we think short was the next move down towards the 50 EMAs and so forth. Now, at the same time, though, even this selling pressure that we're seeing on Bitcoin's price action doesn't have any major support to it. Okay, so whereas we're not seeing the momentum supporting the push to the upside, we're also not seeing the momentum pushing and supporting the idea of the push to the downside. So what this means is that Bitcoin is on the cusp of making a major decision, right? The US election is going to be a factor on that, right? But a major decision is about to be made. And as such, we should be thinking about, waiting for confirmation of which direction that's going to go in. So normally, right, when we have a rising wedge pattern like this, we would take a look at the momentum such as the histogram here and say, look, we're going to bearish breakdown. However, at the same time, when you see that and you start seeing a bit of a reversal in the market, our expectations should be an increase in momentum for selling, but we're not seeing it. Okay, so that's a ground for concern because it would kind of counter the idea that this rising wedge is a high probability of playing out. Now, let's go ahead and bring in the stochastic RSI. The stochastic RSI has come all the way down to the oversold area. Not complete yet, but is a good place to be because the last time that we were down in the oversold area, we saw that push to 73,000, right? From the lows of, what was that? Lows of 58 to 73. Okay, so we saw some good moves to the upside. And most recently, where we did barely tap it, but we tapped it nonetheless on the 27th of October, we obviously had that push to the upside. The times before that, we obviously saw this stochastic RSI on the 7th of September, where it was down at those lows of 52,000 and pushed up to its highs of 66,000, right? So we know that from the low ends of the stochastic, we can still push up a little bit further. Okay, so that is countering the idea that the buying momentum is just not really there. Of course, you can't use the stochastic RSI in isolation. You have to use it with other tools. So, it's one of those. We'll use it as and when we kind of think about what momentum is currently doing. Momentum isn't supporting either movement. The stochastic RSI is bouncing from oversold to overbought quite rapidly. And I think Bitcoin ETF inflows are really what is driving any form of volume to kind of push the imbalance of supply and demand. Obviously, couple this with insufficient amounts of Bitcoin on exchanges, and we can see a recipe for price pushing upwards. Price can push up just by simply withdrawing Bitcoin from the exchanges without any real requirement for additional demand coming on in. We have to understand what moves price, right? Now, if we turn off the stochastic RSI and bring in the divergence indicator, we are still technically in bullish territory here, above the 50 level, operating at 54.41 at the point of recording. But if we lose the 50 area here on the divergence indicator, on the relative strength index, if we lose 50, then there's going to potentially be more bearish shift, and we're actually going to be dropping down more aggressively than maybe we want to admit. Okay, so we want to bear all of these things in mind. Even the volume profiles here, as you can see, they did start to increase but have dropped right off in the last couple of days. Okay, so here you can see that volumes were dropping, okay, and you can really see the difference in these volumes right here. Okay, so you can see the volume profiles were really quite strong in towards the end of 2022 going into the beginning of 2023, and then basically from March 2023, all volumes are just decreasing, and they're decreasing continuously as well. Okay, so for everything going on with Bitcoin on the daily time frame, I'm super cautious. I'm excited at the idea that maybe we're going to get a bullish break upwards rather than a bearish break downwards. However, we can't rule out the bearish momentum We can't rule out the idea that we are likely to see a bearish move in the market. As much as we don't want that, there's a real possibility of it. Now, obviously today's Sunday, so we can talk and discuss about the weekly close position. Okay, so on the weekly chart here, you can see a very bearish candle that is formed. Okay, so we had that push to the upside, right? So that high was 73,620, and basically you can see this really large wick here. Okay, this kind of candle formation is a bearish one, so we need to be aware of that, and that could be a signal as to kind of what is going to be happening here. Now, what the bears would like to do would be to kind of get a close position lower than the previous candle, which was a low and a close position of $68,021.70. If the bears close lower than $68,021.70, then that is going to basically be a very bearish sign for Bitcoin. The bulls are going to be looking for a weekly close, preferably above the open of the last week, which would be the open of $69,032, but I think they really need to target a close position higher than the 67,210. If they can get a close position up there, that's going to actually give them more strength, because we haven't actually closed in this area ever. Okay, so we've gone up into that range, but we've never closed in it. Okay, so if you can close, if Bitcoin bulls can close above $71,280, then that's going to give them strength into what potentially might be a new all-time high. Until that happens, though, we need to acknowledge that this isn't necessarily the best place for Bitcoin to be. Lots of overlapping price action, lots of potential bearish structures emerging, and a big move is on the horizon, whether that's a bullish one or a bearish one. The data doesn't tell us which way that's going to go, but we are building up into a very big move. Personally, I think we are likely to see some positivity around the US election, and I think that's going to have a few weeks of green in the market, but I think ultimately we'll be cooling off by December. Of course, these are just my thoughts and opinions on the data in the charts as I see it, but what do you think? Let me know in the comments down below, or join us in our free Discord server and let us know what you think about BTC's price action at the moment. If you found this video helpful, give it a thumbs up and don't forget to subscribe to the channel for more insights into the world of crypto and Bitcoin and, well, pretty much most altcoins as well. Guys, if you haven't done so already, check out this video right here. It's not one that you want to miss.